Welcome to our Q1 2015 Shopping Centre Investment Report. My name is Barry O'Donnell and I'm Head of Shopping Centre Investments in the UK. In Q1 2015 we obviously had MIPIM, which is always a good benchmark of the appetite for international investors for the UK. This year's MIPIM was no exception. A lot of demand, a lot of investors talking about the UK and UK shopping centres in particular. We mentioned last quarter the emergence of Asian investors into the UK shopping centre market, and one deal that we touched on was the Bentley Centre in Kingston. That deal has now completed to a sovereign fund from Asia, pricing of about £190 million, which is a yield of about 4.65 initial. That is a deal partnering Aviva, the existing owners, and that percentage echoes the percentage of Asian investors in the shopping centre market last year of approximately 20% of the market. So it'll be interesting to see how that theme continues over the course of 2015. Overall for the quarter there was 1.13 billion of transactions done in the shopping centre market. That's in 21 deals. That's not far off the Q4 figure of 1.5 billion, but that was in 40 deals. So very easy to do the maths. The lot sizes have gone up significantly. We'll see how that projects over the course of the year. But last year was a record year in volumes, nearly £6 billion against a 10-year average of approximately 4. So with that kind of run rate, we should be looking at something in between those figures for the year end. You can see from figure 2 some other sample transactions which occurred in Q1 2015. Start with a couple of the larger ones. Telford Shopping Centre, bought by Orion Capital, approximately £250 million. I mentioned the Bentley Centre in Kingston. Meyer Bergman were the vendor there. Also a number of smaller transactions, Preston and Wrexham, showing kind of demand for that kind of mid-tier kind of lot size. But also it's important to point out debt availability has driven a lot of the rationale with these purchasers. Private equity is very aggressive in the market at the moment as the debt has come to meet that demand. So at the moment we have a bit of an imbalance between supply and demand, with a lot more demand than there is supply. We do think there will be a severe lack of supply in the super prime end of the market in 2015. The most notable scheme that is going to complete is Grand Central in Birmingham. This is a 250,000 square foot John Lewis anchored scheme, and it completes in September of this year. If you look at figure 3, we've got the DTZ yields, and you can see in super prime we've got that inward at 4.5% minus. Across the board most yields are stable or trending inwards. I'd highlight the tertiary yield at 8.5%, which is stable at the moment. That's come in significantly over the last few quarters, and I think that reflects the level of debt that's available in the market. Well, hopefully you found some of those highlights interesting, but to download the full report, please go to dtz.com/research, and I'll see you again in Q2 2015.